Will Palantir ever recover to its previous all-time highs, or is the stock going to be down only from now on? I've seen plenty of comments like that on my other Palantir videos, so I figure in today's video I'm going to address the elephant in the room and break down exactly why I have zero doubt in my mind that Palantir will recover to its previous all-time highs and then some. And I'll also talk briefly a bit about the timelines for something like that happening. So like I said, I have zero doubt that Palantir will recover to its previous all-time highs and surge past that to set new all-time highs. My confidence is not shaken, and I've been continuing to dollar cost average into my Palantir position over the past few months. So let's talk now about why my confidence is not shaken, why I think that Palantir really is still a gem, and why I still feel super comfortable, potentially even more comfortable putting money into this position while Palantir is at these valuation levels. Okay, for starters, yes, Palantir is down around 70% over the last 12 months, and a lot of people would look at a graph like this, a chart like this, and say, this company is dead, maybe it's never coming back. But you have to examine this in the context of the larger macro picture. And if we look at other companies, similar companies, for example, a competitor of Palantir, Snowflake, they're down 60% over the last 12 months. So it's not just Palantir. In fact, this is hitting the entire global economy, and it's hitting especially hard companies that are tech companies, that are growth companies, that are focused on growth currently as opposed to profitability. So for example, if we look at the ARK-K ETF, which is Cathie Wood's infamous technology innovation ETF, where they invest in high growth tech companies, they are down 70% over the past year. So this is not a Palantir problem. This has nothing to do with the fundamentals of Palantir the company or Palantir the stock, the investment. Really, the main cause of Palantir's downturn is the macro environment. And even large companies that at this point probably wouldn't be considered high growth tech companies like Meta, which is very established, has been around for a very long time, is down more than Palantir over the past 12 months. Netflix is down 60%. Even a company like Amazon, which deals in physical products, among other things. Of course, they have their AWS and cloud services platforms, but Amazon is down 50% over the past 12 months. And this is one of the largest companies in the world. So this is the situation that we're dealing with. And the macro environment is fraught with risks for high growth companies. For example, as interest rates go up, the cost of capital, the cost of borrowing gets more expensive. And of course, it affects the discounted cash flow rate of future potential cash flows, meaning that the valuations of these companies come down. And then we've got all the global supply chain issues. We've got war between Russia and Ukraine. We've got China's zero tolerance policy with all of their lockdowns, all of which is creating the perfect storm to affect the valuations of companies. However, Palantir is in a much better position than many of the other companies for a number of reasons. First of all, their cash position is impeccable. They've got $2 billion in cash, and they've got essentially zero debt, either long-term or short-term. Another major positive factor for Palantir getting through this downturn and coming out even stronger on the other side is the fact that they have so many large, sticky contracts with governments around the world, mainly the US government, but increasingly governments in Western Europe, as well as in Canada and in Japan and a few other countries around the world, Western allies. Palantir also has excellent customer retention with a net dollar retention rate of over 100%, meaning that not only are customers re-signing deals with Palantir after their contracts expire, but on average, they're re-signing deals for more money than they paid previously. And the cherry on top of all of this is that over the past couple of months, Palantir has announced over $1 billion in new deals with both government and private sector clients. So for example, if we go to Palantir's investor relations page, we can see some of the announcements. They announced a new deal for $100 million with the US Army Artificial Intelligence and Machine Learning Lab. They announced new deals with Hyundai Heavy Industries Group. They announced new deals with Homeland Security. Then there's also a new contract with the Army Material Command Service and also with the Food and Drug Administration in the US. And on top of all of that, Palantir received the IL6 accreditation, which means that they have achieved the highest security classification, which means that they can contract with the Department of Defense in the US for basically any services, any software services, cloud services that they require, Palantir has the highest level of classification, which only a very, very small handful of companies in the world have achieved. So this opens, again, new avenues for Palantir to get into some of these large sticky contracts that once you're in, you essentially have a very, very hard time to lose. Then another big one, which was recently publicly announced, although some people had already suspected it, is that Palantir and Hertz, the rental car company, are working together. So that means that Hertz is using Palantir to try to optimize the usage of their fleet of rental cars. And amongst all of these recent announcements of new contracts, both government and commercial, Palantir was ranked #1 in a worldwide artificial intelligence software study, which basically said that Palantir has the greatest market share and revenue of software that relates to artificial intelligence, which should come as no surprise and is likely going to continue increasing as the snowball effect continues to roll down the hill and Palantir increases the size of its contracts with existing clients and also signs up new clients in both government services and then in new industries around the world. So yes, I have no doubt in my mind that Palantir will recover. They may not be profitable on a net accounting basis, but they are cash flow positive from operations. And like I said, they have a significant cash position with no debt. So they are well placed to come through a downturn or a formal recession even stronger than they were going into it. And the fact that there's these supply chain issues around the world could actually be a boon for Palantir because companies will contract with Palantir to try to improve supply chain issues. The fact that we've got these challenges is a perfect opportunity for Palantir salespeople to step up and show these companies all around the world the value that Palantir can provide. And if you want to see a really interesting clip talking about how much money Palantir can save a large institution, a large corporation, you can see the presentation by Tyson Foods CFO at Palantir's FoundryCon, where he says that I think they spent $6 million on Palantir and saved hundreds of millions in return by optimizing their supply chains and optimizing for various different factors within their organization. And the more pieces of data that they fed into the software, the more optimization and more cost savings they were able to find. And that should apply to every company in every industry around the world. But how long is it going to take for Palantir to recover to previous all-time highs and then set new ones? Well, given the macro environment, it might not be a short-term endeavor. And regardless, if you look at any of my Palantir videos that I've posted on my channel, I've always said that for me, this is a long-term buy and hold investment. I'm not a gambler, I'm not a swing trader, I'm an investor. And in this company, I see significant potential in the long-term future. I'm talking about 20, 30, and beyond. So that's the time horizon that I had in my mind going into this, even before this massive downturn started. I think that realistically, for Palantir's share price to turn around, not only would they need to continue delivering revenue growth and continuing on the path to profitability and announcing major new deals with new clients all around the world, but also something in the macro environment would have to give. I don't think it's going to be possible for Palantir to reach $40 per share in the near-term future unless the macro headwinds that are affecting every company all around the world turn around. And that is not likely to happen within, say, the next 6 to 12 months. Now, exactly when it's going to happen is hard to predict, and it depends on so many different factors that it would be a fool's errand to try and actually pinpoint a specific date and time. But one thing I will recommend is that you listen to this podcast with Macro Alf. I'll throw a link down in the description box below. In my mind, it's one of the best explanations I've heard so far of the cyclical nature of the macro environment. And so if you're looking to get a better understanding of how long it takes for these cycles to run out and then turn the corner and then potentially seeing an uptick again in asset prices, especially in risk-on asset classes, this is a great podcast to listen to. This guy is a macro expert and he has so much knowledge on the subject, so highly recommend. Anyways, that's all for today. Thanks so much for watching. I have a couple more videos coming out soon about Palantir's Q3 earnings and also about potentially some unseen as of yet Palantir contracts with the Canadian government. So that should be interesting. Hopefully you'll stick around for those. See you later.